Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. I'm starting to like it more and more every day now that I say it every day. It's Wednesday, it's September 20th. It's about 7:47 in the morning. The market's going to gear up to open up in about an hour and 42 minutes to be exact with you. See, I still know my math. Before we get too deep into this video, just want to make sure you know that you could find these videos in the Roger-Scott YouTube channel. Just go to Roger Scott YouTube channel. You could type in Roger-Scott in YouTube and you'll find it. You can also subscribe to our Telegram channel. Just subscribe to Telegram. Hit the link at rogerscott.com/Telegram. And you'll be instantly subscribed. You'll get free trades, my scanner setups, all the good stuff, my prognosis, and pictures of my trading assistants, the furry ones. Oh yeah, I don't play around. Also post comments in the YouTube channel. That way I can address them for you and everybody else. I'm pretty transparent, so ask away. The market's going to gear up to open, as I mentioned, in about an hour and 42 minutes. The S&P right now is kind of not really doing anything. We have a little upward bullish bias after a nice little sell-off yesterday, but the market didn't close all that bad yesterday. I'll go through that right now. The Dow is a little bit below random. This is anything below 100 is random. The Nasdaq is random. Everybody's waiting and waiting and waiting for this right here. Mr. Jerome Powell press conference. Now, nobody's really waiting for the FOMC announcement. They're going to leave rates alone. The odds are about 99.9%. It would be a shock if they didn't, but they're going to leave rates alone. The question is what he's going to tell us. Is he going to be extra hawkish? Is he going to be really bearish? Is he going to say? Well, I think things are moving along in the right direction. Core CPI and PPI are moving in the right direction, but inflation is sticky. We're going to just kind of sit around and wait. I think that's what he's going to say, because in essence, I think we've gotten to the point where he can't really lie too much or exaggerate what's going to happen. And at the same time, economy's not doing all that bad. I mean, inflation is moving in the right direction, not energy and food, but outside of food and energy, which are very hard to tame, and those take some time. Things are moving in the right direction. So I think right now, I'm pretty confident that the Fed will continue raising rates, but there's really no reason to scare folks right now. So I think they're going to play the things are moving in the right direction. The Fed data is telling us inflation's moving in the right direction, but we need a little more time. So we're just going to stay afloat, and we'll see what happens. Some indicators are looking weaker, but some are looking stronger. They may mention China. If they mention China a lot, that's not good. That means they're looking for a negative narrative because China has been pushing us down. But if they don't really mention China too much or global economy and kind of slide past that, it won't be too bad in my opinion. Now, here's what I'm thinking. Let me show you what I'm thinking. Now, obviously, what happens will dictate based on what Powell says. But if you look at the SPY yesterday, if you look at the overall SPY, let me just show you yesterday's trading action. This is yesterday, okay? We went down and we closed all the way up. We did a complete V, and now we're trading above that level. So based on and the 5-day, we're almost at a let's see here, 15. Today is the 20th. We're approaching these levels. So if we can break out a little higher, maybe above. I want to see us break above the 445 level. We're already opening up at 443.62, so it's not really crazy or anything. Nothing I'm saying here is really whack. But to me, it looks like the market there was buyers coming in second half of the day yesterday. Let's look at the QQQ. So to me, right now, the market doesn't look all that bad. I mean, again, look at yesterday. See, it had a big shake-off, but then it closed higher, and now it's above yesterday's close. So there's definitely some buyers sitting there on the sideline waiting to see what happens. Now, another thing you have to pay attention to is the bond market. Keep an eye on the bond market. If the bond market starts moving higher as we hear the Fed statements, that means things are better than expected. If the bond market starts moving lower, that means that's going to put pressure on the stock market. But again, you may just see a lot of volatility. That's why I don't want to make any decisions until after the announcement, because the markets are schizo right now. Now, aside from the Fed announcement, and that's the big one, we're also going to have the petroleum status report. If you look at crude oil right now, And I'd actually like to look at the commodity if you don't mind. I started out in the commodities. I love commodities. Commodities are so much fun. Crude oil is not looking all that bad. We had a little sell-off yesterday, but look at this trend. So to me, the fact that we're at the 8-day moving average doesn't really mean much. Now, this is being cautious, but I'm not saying buyers aren't coming in. And if we break through this level, there may be something there. But right now, crude oil is not looking all that bad. And if you look at the energy sector, it's kind of, remember, this has natural gas too, and other energy-related stocks, a little bit of utilities. But this isn't looking all that bad if we clear out. So this could be just a nice little shakeout like we had here or like right here. I wouldn't throw energy out with the bathwater, okay? Another factor. Yesterday we had housing starts and permits. Now here's what's interesting, and I wanted to kind of briefly talk about this. Permits were really good, which means they want to build, because if they don't want to build, they don't need permits. But starts are off. So this kind of offsets each other, because the starts, that could be just a seasonality type of thing. We're getting into the winter months. But permits, if permits are going strong, I think this would cancel each other out. In light of that, home builders actually made a pretty good support. 1, 2, 3. And unless we break down from this level, I think we're going to hold this support level. Now, let me just take a look at... we're below the 50, which is not good. We're above the 200. Let's see where the 100 plays in all of this. I don't know why I don't have the 100 on here. Let's see here. Moving average. Add the 100. Yep, right there, right at the 100 day. See, you got to have the 100. So if we hold the 100, it'll be okay. We'll know in a few days if this doesn't break lower. We should be moving higher. So the fact that we didn't go down and actually rallied yesterday, look, this is yesterday. Down sell-off, rallied the rest of the day, high volume coming in at the end of the day. The point is the markets are not that unstable. Now, again, on the Dow, we bounced off the 100-day line and we look a little higher. So I'm seeing a lot of volatility and I'm seeing choppiness. But if you look here in the last 3 months, that's what we've been getting. We've been just very, very choppy. So I'm very, very slow to make decisions on trades because I don't want randomness to stop me out for absolutely no reason whatsoever. That would be stupid. Looking at the QQQ while we're here, let's see. We're not even at the 100-day line. We're not even at the 100-day line. We're just below the 50. The 50's right at the 8 because we haven't really been doing anything. So again, keep an eye on what the Fed says today. It'll be important, but again, don't read too much into it and keep your eye on the indexes, especially the 100-day moving average on the Dow, and whether we bounce off of these levels or whether these levels sink. Very, very, very important. As far as sectors are concerned, and remember, don't go anywhere. I'm about to give you my favorite stock, my favorite long, and my favorite short, so don't go anywhere. Let's look at everything on a 3-week basis. Energy, consumer discretionary, communication, financial. Look, energy, financial. Then you have the QQQ, which is this. We are as mixed as humanly mixed could be. Notice markets choppy, completely mixed. I mean, look at this. Home builders are up here. Retail's down there. Russell's over here. Consumer staples is here. Financials are up here. Utility. I mean, this is like someone took a bag and just did this to it. Let's see. On a 6-week, you're getting a little better idea, but still, retail, home builders, Russell, mid-caps, consumer staples, industrial, material. The Dow is underperforming the technology, and it's still that way. That's actually bullish because in a bearish cycle, blue chips actually outperform technology. Now, let's talk a little bit about and tie all these pieces together, and then we can. And by the way, I'll get into the day trading stocks to watch for today in a little bit, but I want you to keep your eye on these three. They have earnings today. I think they have earnings after the close. I didn't see anything this morning, so keep an eye on these stocks, and I'll talk about them in just a minute. So market participants are gearing up for the interest rate decision. Economic data on Tuesday showed the U.S. August housing starts dropped to the lowest level since 2020, but building permits rose. Today, all eyes are focused on Powell and his cronies. 99% that the Fed is going to keep rates the same, but they'll be paying attention to the post-decision press conference by you-know-who and the press release of the Fed summary projections, particularly focusing on the quarterly dot plot. We'll see what happens there. We also have crude oil inventories. I'm still bullish on crude oil. Bank of America upgraded the S&P 500. That should give us a little bit of a tailwind to above 4,600. Where is the SPY right now? Let's take a look. Let's see where the SPY is. Oops, not soy, SPY. 1 second. Yeah, so 40, right where we're at right now. Just a little bit above where we're at. Kind of interesting, right? They're not taking big chances. Europe, they're up a little bit. They're waiting the decision. Real estate and healthcare stocks are leading the market higher. Data from national statistics showed on Wednesday that Britain's inflation expectedly fell to the lowest level in 18 months due to a decline in food prices. We're not seeing that here. Matter of fact, we're seeing higher food prices and energy prices, but food is stabilizing. China closed lower, not good for us, as worries persisted regarding the world's second largest economy, despite the positive data from last week, while foreign investing selling also weighed on sentiment. China is a big question mark right now. Japan closed lower as investors adopted a cautious stance in anticipation of the important central bank decision, including those from the U.S. Federal Reserve and Bank of Japan. Resource stocks lost ground after crude oil prices retreated from a 10-month high. That happened globally, while shippers and other stocks with high dividends continued to outperform. That's flight to safety. That's telling us they believe interest rates will go up, which I believe will in Japan. Now, day trading stocks, a few. FedEx. FedEx is not really a big day trading stock, but I think it's coming out with earnings after the close today. If FedEx breaks this line right here, the 253 level, I would be a buyer if volume is good. 253. Day trade. Don't hold it overnight because you have earnings tonight. So it's going to go towards earnings, okay? You don't want to hold this overnight. Next one is General Mills. Let's look at General Mills looks awful. KB Homes. Let's look at KB Home. Closed up, but I want to see it up here. But it looks like it could be basing out around these levels. So I want to see it trade above 49.62. If it trades above 49.62 today, you can get into a day trade, a scalp, a little bit towards high volume towards the end of the day. Now let's look at trades that we can institute today. So let's look at the S&P 500. Let's look at, actually, you know what? Let's look at one of my favorite scans. 20-day breakouts. Blackstone. Blackstone looks fantastic. Blackstone, BX. You want BX. A COM looks really good. And you could put a stop loss right here at 103.40. And on Blackstone, you could put a stop right here at 111.45. I really like Blackstone a lot. And I like Chubb. I also like Chubb. But the two that I really like are BX to the upside and ACOM. Also, MetLife looks really good. MetLife, ACOM, and Blackstone. You would put a stop right below the recent support level. To the downside, let's see here. To the downside, oh boy, where do we begin? We made money on this one. 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 Oh, there's such good ones here. All right. Let's see. Boy, where do I choose from? Quest Diagnostic. This stock looks like it can go quite a bit lower. It doesn't have a major support all the way till down here, which is about 5 points down. Quest Diagnostic. Put a stop right at 129.80, right there. And take this sucker down. Those are my favorite stocks for today. Again, don't make too big of a reaction after the announcement. Watch and pay attention to what Mr. Powell says and look at the trading action and the trajectory of the S&P and whether we violate the 50-day moving average. Now, we have our very own in-house energy economist here at the Trading Pub. His name is Garrett Baldwin. And let me tell you, this guy's brilliant. He really is brilliant. I wanted him so bad in our company. I told the guys, I really want Garrett here. When he talks, I listen because he knows his stuff. He's a heck of a trader, too. Garrett just issued a dire warning of the energy supercycle that's already underway, and we could see $5 gas and higher before you know it. And something tells me you guys are actually going, yeah, I could see it, too. The pandemic, the Russian-Ukraine war, the demolishing of refineries in the U.S., it's all snowballing into something that could be even worse than the great financial crisis. And it's set to happen as soon as the winter happens. But here's the thing. If you know how to play it like Garrett, you could turn the tables and reap a windfall from the pending energy crisis. Folks, I want you in this. You got to pay attention. Click the link below. Check it out. Get all the details. If you can't find the link, go to my YouTube channel, and it's in there below the descriptor. Have a great day, and don't get too shaky ahead of this meeting. Let's see where the market goes before we make any major decisions, okay? Have a great day. You know my email address, roger@rogerscott.com. I'll talk to you soon. Bye.